Welcome to Gaia's Trades, where I simplify Forex for everyone. If you are new, confused, or tired of losing trades, this is your fresh start. In this beginner's guide, I will take you by the hand and walk you step by step from zero to understanding the market like a pro. No fluff, no upsells, just real knowledge. Most mentors hide behind paywalls. Let's get into it. Part 1 of this is what you expect out of the training. I've got 3 parts lined up, so let us delve into part 1 first of all. Part 1, I will be talking about introduction to Forex trading. We shall move to tools you need to start trading. Under the tools, I will touch slightly on TradingView. I will touch a little bit on MetaTrader 5, and I will also mention something to do with Forex Factory. And number 3, we are going to cover Forex terminology you must know as you want to begin your journey in the Forex industry. So, without wasting much time, what is Forex trading? Forex is a short form which is derived from foreign exchange. What is foreign exchange? This is where currencies are traded. Do not worry, because we shall be delving into detail on how this Forex trading happens. So, this is where we buy one currency while we are selling another. So, for example, if there's a pair called Euro USD, for example, if the market is buying, we will be saying we will be buying Euro as we sell the US dollar. It is as simple as that. If this asset will be selling, if the graph is dropping like this, so we will be saying we are selling the Euro, and automatically the USD will be buying in this case. Also, it is worth mentioning that Forex is the largest and most liquid market in the whole world. Why is it called largest and most liquid market? For example, if you wanted to trade today, you go to the broker, you open your account, you have the skills to trade, and you want to participate in the market. It means the market has enough liquidity to fill your order in. So for example, if today I mentored 1 million traders and they want to go to the market and make money out of it, the market is rich enough to feed us all. That is the beauty of Forex trading. It does not matter how many people we are going to trade. There is something for all of us in this industry. All right, so let's move to tools you need to start trading. So first of all, you need 2 devices. One is the laptop or a computer, and you need a smartphone. A laptop and a computer, this is where you analyze the charts, and a smartphone will help you to do what? To monitor your trade once you've entered them. Okay. Secondly, you need a reliable internet connection. Reliable internet connection will help you stay on top of the game. So after you've analyzed the market, you need to place your trades. So once you place your trade and maybe your internet was poor, maybe your trade did not get filled. Reason why it did not get filled is because you had a poor internet. So reliable internet will give you real-time candlestick pattern formation. So you read price action as it happens. So that way you will be able to follow through. Once you've placed your limit order, the price has come to your point of interest. You want to check, has my market been activated? And if it has not been activated, is there anything I can do? Maybe re-enter the market or cancel the trade if I see the situation looks like my position may not hold. Yeah, that is it. So you need to know the trading platform also. There is MT4, there is MT5, there is CTrader. MT4 basically stands for MetaTrader 4. This one stands for MetaTrader 5. Actually, MetaTrader 4 and MetaTrader 5, they're just same things. It's like iPhone 14 and iPhone 16. They are both iPhones. The only difference is the latest one has some updated features compared to the previous one. That is the only difference. Personally, I use MetaTrader 5 for my execution. Some people use CTrader, especially if you want to trade with brokers like IC Markets. You must understand how CTrader works. Okay, so next is about Forex Broker. So Forex Broker, this is the platform that will enable you now enter the market. Don't worry if you're confused up to this level, because I shall be delving into these brokerage firms and show you exactly which broker you are supposed to trade with and which brokers you need to avoid. For example, today I want to mention I've been trading with XNS, but lately they are busy manipulating prices. So you'll find that other brokers, the position, the levels are holding, but for XNS, the levels are being pierced. So in other words, XNS is manipulating prices to hunt your stop losses, because they are in the business of making you a poor person as they are making money to the brokerage firm. So those are the things that I shall be delving into so that you do not make the same mistakes I have made. Learn from my mistakes, pick it up from here and be profitable. Why would you do mistakes yet there are some people who have done the mistakes that you should be avoiding? So we have FX Pesa. This is another good broker. IC Market is another good broker. Personally, I prefer IC Market lately because I've seen the way they do their things. But again, I am not here to promote any. So at individual level, make sure that you do your research very well before you decide which broker you are going to trade with. Because some brokers are not regulated. Once you put in your money, you deposit that money, they are going to make sure that you do not withdraw a penny. They are going to lock in your money and take it away from you. In the end, people will think, okay, Forex is a scam because look, I deposited X amount of money to this brokerage firm, but they cannot allow me to trade. They cannot allow me to withdraw. And if I'm going to trade, they are going to hunt my stop loss to make sure that I do not make profit. Okay, so stay tuned and subscribe to this channel, because here is where I share the secrets that some other gurus sell outside there. I'm not going to ask you for any penny for this information. I'm going to give you these market secrets for free. So I want to build a community of profitable traders. All I need from you is just support the channel. Like the channel, subscribe to the channel, turn on that notification bell so that you do not miss a gem when I'm dropping, because this is just but a beginning. Okay, so you need to understand the charting tools. Charting tools are so many, but I have chosen these two for the purpose of just illustration. We have TradingView and there's platform charts. Personally, I like using TradingView because after trying using these other platforms, I did not find the quite a number of tools that TradingView can offer. So for me, I'd suggest if you're a beginner and you are lost, you do not know where to begin, TradingView is a very good platform that will enable you to do your chart analysis. And do not worry, stay tuned to this channel, because going forward I shall be doing weekly chart overview, and I will be giving you free signals where I think the market is going to pick from, be it a buy or a sell. I'll be dropping you guys where you need to put your entry, where you need to put your stop loss, and where you need to put your take profit for free. I'm not going to charge you anything, guys. Next, you need to know the economic calendar. Economic calendar, this is where you need to understand what are some of the news that are going to come up in the course of the week. This way, you will avoid entering trades towards the news, because when the news is about to break, the market sometimes is so unpredictable. So what I will advise you as a beginner, and there's a person who's listening to this today, ensure that you train yourself on how to read the economic calendar. And if you do not know, do not worry. I say again, you are in the right place. Just stick around. I will be delving into Forex Factory and show you how to read the economic calendar and know what to anticipate during the next market move. Basically, this is how trading view looks like. I picked this chart from NAS 100 4-hour time frame, and as you can see, this market at the moment, it is on a bullish trend. How do we know that the market is on a bullish trend? We see break of structure happening towards the upper side, and the higher lows are being respected. Okay, so for example, this market, look, it left this point, it went up to this level, it retraced back. I shall delve into this. This is called return to origin, RTO. Once the trade moves up and breaks the structure, normally it will return to origin where the movement started. So you can see this level here. There is a fair value gap. This is a bit advanced, but it's good to know at this juncture so that when I speak about fair value gap in the future, you will be able to understand. So it will come back to fill this fair value gap, which is return to origin, the origin that caused this impulsive move that broke the structure. And then from here, traders now will start looking for entry checklist to see if they can now move with the market up, and then the target will be up here, because if we are on the bullish movement, it means we will be breaking the structure upwards. Okay, so after that happened, you see the price went up, it swept this liquidity, and then it retraced back a little bit to the level down here. It came to fill this small imbalance left here. Why did it come here and not down here? I shall be explaining that also in my next and subsequent videos. So again, stay tuned, don't go too far. So after that, it came down here, reacted from this level, went up. Look at what happened. After it went up, it broke this structure clearly. So it has broken two structures. It broke this structure and has broken this structure that violated the other one by sweeping the liquidity up there. So you see the bulls are very strong in this level. What happened after breaking that structure? This is what we call RTO, return to origin, the origin that broke the structure, which is another fair value gap is being filled right here. So the price came down to this level and then it is now starting going up. Your guess is well as mine. Where do you think it's going to target next? It's going to break this structure. So if you are a good trader and you timed the market when it came down here and you looked for entries and you found your entry, because clearly there was a demand zone here, which is the last bearish candle before the impulsive move up, there was demand. So the price came back, tapped to this demand, and now it is rallying up. So it will sweep this internal liquidity, retrace a little bit, and then continue up to break the entire or the overall structure, which is up here. Okay, that is it for now for trading view, but I shall be delving in during the weekly analysis to show you exactly on live charts on how you need to analyze the charts, look for entries, and time the market and place limit orders. So this is how MetaTrader 5 looks like. So MetaTrader 5, the work of MetaTrader 5 is to allow you enter trades. So once you've analyzed your market on this platform, you've realized the market is moving up. So I'm timing my market down here. The market to come back to origin, return to origin. Once it returns to origin and it is at this level, I will now start looking for entry opportunities. So once I spot the entry opportunity on the lower time frame, what I will do, I will now move to MetaTrader 5 to place my orders. So I will come here and say, look, there is a demand zone at this area. I need to enter and my target will be this liquidity. But you can take your first take profit at this level, because you know, and we all know very well, once the market sweeps internal liquidity, it is going to retrace down a little bit. Sometimes you rather take your profit here as it retraces. Sometimes it might stay here for quite some time, which might take 2 or 3 days before it goes up. So I like telling my students and my community members, look, on the 4-hour, ensure that you bank your profit before the overall structure is broken. Why? It will be broken eventually, yes, but this this liquidity, once it is swept, it is going to hold price down here for some days before it rallies up, because it will come down here, it will fill this imbalance and then start going up. Why would you wait until the market, comes all the way down here? You're waiting for your profits, yet you knew very well there's some liquidity level here that is going to reverse the price. So this is what I'll be teaching you guys, because most people do not know where to exit. Some of them, they exit very early because they have no idea. They do not know what the market is targeting. So once you know where the market is going next and what is going to do next, it means you will be a step ahead. And that is what the 1% winners in the market, they have known. And this information, my friends, I've told you, it is sold elsewhere under private mentorship, but I'm giving you here for free. These are the secrets that have made people millionaires out there. Stick to this channel and you'll be the next millionaire. This is how Forex Factory looks like. I talked about news, and I told you guys you need to understand how to read news. So for example, I will take you through one of the assuming we are on Wednesday, June, by the time I was recording this, assuming this is the day that we want to trade, maybe we want to look for some, setups, and we need to see what the news have for us. So at 9 a.m., we shall be having GBP CPI, Consumer Price Index, year to year. You understand? So previously it was 3.5%. And now it has been projected that it is likely to drop to 3.3%. So this means consumer price index is going lower. So if consumer price index drops, it means the currency drops in strength. So if the currency drops in strength, it means whatever currency it is attached to, that particular currency will gain weight. For instance, GBP USD. So I want to teach you how to read the news like a pro. So there's GBP USD. We know from the fundamentals that it is likely GBP is going to weaken. So you put this as a weighing scale and you put your pivot point at this level. And then you say, for example, what will happen if this GBP is going to lose weight? Remember, it was balanced. And now this one is going to weaken. Definitely, the USD will weigh it down. So if it will weigh it down this way, it means the charts will drop. If the charts will be dropping on trading view, you will be looking to sell. Okay? Because this was lighter compared to this one. Assuming the news were telling us the CPI was going to be positive. So if the CPI were going to be, let's assume previously it was 3.5 and now they have projected to be let's say 3.8. What would have happened to this GBP USD? It means GBP would have gained weight. So putting your pivot point here, this is how simple you read the news. You put your pivot point here and say, look, this one is going to be heavier than this one because of the projected results. CPI is going up. So if CPI goes up, consumer price index, if it goes up, it means the currency is going to strengthen. So if it strengthens, basically it is going to weigh down. This one will be lifted up. This one will weigh the USD up. So if it weighs the USD up, it means our graph will look like this, from left to right, looking upward. In other words, it will be looking like this graph here. It means the market will be. So in this scenario, it means the USD is heavier than JPY. It means the USD is stronger than the JPY. That is why the graph is buying. It means this is heavier. That's why the graph is looking up like this. In this scenario, it means the USD at the moment is stronger than GBP. That's why it is weighing it downwards towards the heavier part of the currency. Okay, you can see Euro USD. It means the USD now is heavier than Euro. It means USD has strengthened over time, and that is why it is weighing down. Look at this. The USD is heavier than Canadian dollar, and that is why the graph is looking like this upwards, because this heavier part is on the left hand side. So we go to the USD. You can see USD is heavier. What is happening to AUD? It is weighing it downwards. You understand? That's how simple you need to read the news like a pro and make profit out of the market. Actually, forex trading is simple. It's only that some people complicate it, or maybe you who is listening, you have been complicating it by listening maybe to those people who sell you fear. But I'm here to tell you, forex trading is very simple, provided you have the right guidance, and I'm gonna give it to you for free. Okay. Forex terminologies that you must know as you head to the trading business. You need to understand a pip. What is a pip? A pip is the smallest unit of price movement. What is this smallest move in the price movement? I need to take you back to the trading view a little bit, and then here at this level I want to do something. I want to magnify a little bit so that we can be able to read this price together. Okay. By the time I was recording this, the price was at 21,930.05. So this 0.05, it means the price is at 5 pips above 21,930. So if this price will continue moving up a little bit, let's say it goes to a 0.7, assuming it goes to 0.7, we would have said the market has moved up by 2 pips, because the decimal place gives us now the number of pips the market is going to move. You understand? Okay, so if it moves down 2 pips, it will be 21,930 point minus those pips that are going to move, it will be 0.3. Because 5 minus 2 pips, you will find 3. I'm going to give you a task. Okay? So, assuming at this level, the price has moved up by 5 pips, what will that price be like? I've said it moved from here up by 5 pips. I'm going to give you 10 seconds to calculate for me and tell me. Remember the pips? After the decimal point, you add. I said 5. So it will be point, then add 5 up. You get? Okay. If you said it will be 21,931.0, then you got it right. But if you got something else other than whatever I've said, because it will be 10. So that 10, the 1 will be moved to this other side and the 0 will remain. You understand? Because here you cannot put 10. You cannot say 0.10. Okay? So once you add 5 upwards, it will be 21,930.10. Now that we only have one decimal place, that one will jump to this other left side and the 0 will remain on the other side. But if you got 21,930.10, then you are right. Yes, you're also correct. 0.10 or 21,931. Both of you are right. But if you got something else other than that, then you need to review what I have just taught you. Okay? Let us go back. All right. So, lot size. What is the lot size? A lot size, this is the amount of money you are willing to risk per trade. So there is a standard lot size which is 100k, there is mini which is 10k, there is micro which is 1k. This should not give you headache. In short, I will take you to TradingView and I will show you how to calculate this lot size. Let us just finish with leverage, spread, stop loss, and then I shall cover this in the one instance once we go to live charts. Okay, so mark that lot size. I will show you what it is on TradingView. Leverage. What is a leverage? Leverage, these are borrowed funds that help you increase your position size. For example, if you want to trade and you want to get a leverage of 1:100, okay? If you want to trade and you want to put your leverage 1:100 and you're risking, let's say, 50 US dollar. It means your trade will be multiplied by 100, okay, to get that lot size. Okay, spread is the difference between the bid and ask price. On these live charts, I want us to discuss further about pip, lot size, spread, stop loss, and take profit. So first of all, we would want to agree that when you see the overall chart, because this is a 4-hour chart, it is showing that we are very bullish. We broke the structure here, we broke another structure here, we broke another structure here. So you can see it is evident that we are breaking structures upwards and we are respecting demand levels. Demand levels are being respected. Up to this level is filled fully. But here, there's some imbalance. After the break of structure happened, this source has not been filled completely. There's some imbalance here, and that is why I want us to discuss more about that is an imbalance. There was an imbalance that was left here. You can see price has been coming all the way down here, and all it has been doing, it is just trying to engineer liquidity. So these are equal lows. You can call it equal lows or liquidity levels and all that, because there's the imbalance below it. So majorly, the price would want to come to this level down here to fill this imbalance before it gets up. So this was a 4-hour demand. 4-hour demand, which has been mitigated. And after that, there is another demand. How do we know that it is a demand? This zone here, after it tapped to this level, we saw very impulsive move upwards, leaving this imbalance, the fair value gap. Price came down here trying to rebalance it, but it never filled it fully. Instead, it generated liquidity and moved up. It ended up breaking this structure. So for those people who are impatient, they waited for price here. So these are the retail traders who pushed this price up. So the price eventually went up. So what happened, it could be even the smart money were engineering prices so that it will find a lot of stop losses somewhere down here. So assuming someone tried to enter here and they saw price holding up, they are going to try to place their stop losses and their entry again at some level down here. They're going to place their orders at this level, hoping that if the price is going to come down here, we are going to push it up to this level. Because look, price went up, it came down here, it rejected this level, it went up and broke the structure. So without zooming in to see that there's an imbalance left behind here, and this area is key because it is the one that led to the overall break of structure. This one is the reason why it led to the overall break of this structure. So inside here, this is just liquidity being engineered. The smart money made people think, look, this level is holding, we've gone up, we've swept this liquidity, we have tried coming. You see, someone might have traded from here and maybe got lucky, it went up, but the real deal is down here. After the overall liquidity has been swept, now the real move is going to happen. So how would we enter at this level? I want us now to check. On the 4-hour, the market has gone up. Patient traders are always rewarded. So after the price has taken out all these stop losses, It has come, some people put their stop loss down here thinking that they will be safe, but eventually price came to rebalance this fair value gap, which in return made these people who are waiting down here to get a good entry point to push the price up. Now, assuming you are on the chart, of course I captured this trend. Assuming you're on the chart and you wanted to enter, how would you enter and where would you put your take profit? Not too late, not too early. So first of all, you want to monitor the price as it was coming down. This is the RTO leg, return to origin. The origin is down here. This is the only imbalance that caused the overall break of structure. So this price is going to return to origin. Once it gets here, along the way, it is going to generate bumps. So those bumps are the liquidities that we are going to aim. So the first bump was generated up here. So this is liquidity. The second bump was generated right here. This is another level of liquidity. The third bump was generated right here. There is another level of liquidity. So as a trader, you aim for the fruits that are low hanging. Eat those first, because you never know how long it will take for price to get there. So up to this level, we know that we have 3 levels of liquidity that we are going to aim if the price gets to this 4-hour demand zone. Okay, we know there's liquidity here to be swept, there's imbalance to be filled, and now we are so sure that after the liquidity has been swept, price will look to rebalance liquidity upwards. Okay, now price is here, we're looking to buy. What are we dropping down to the lower time frame to do? We are dropping to lower time frame to look for entry confirmation, and our target will be this low hanging fruit here. Okay, now we move from 4-hour, we go to 15 minutes. On the 15 minutes, you see now price has tapped into the higher time frame point of interest, which is 4-hour demand zone. I want to bring it here. So what are we seeing on the 4-hour demand zone? We are seeing sweep of liquidity. That is liquidity sweep. After that sweep of liquidity, what happens thereafter? There is change of character, impulsive change of character. Why do we call it impulsive? You look at this candle that went up. It is very strong, aggressive candle compared to these candles that have been forming around here. So you see it swept this liquidity and then it went up aggressively, showing a lot of seriousness. What did it leave behind? Assuming we did not see this, once it broke the structure, it left behind an imbalance. There was an imbalance here. What happens to price once it has left behind imbalance? It will come back to rebalance that level. So we have our 15 minutes demand zone created. Okay, so up to this level we have a demand zone done what? Created. So where do we put our stop loss and where do we put our take profit? Okay, there is a tool that I've customized. I put it from the tip, the invalidation point. It means if price breaks this point here, once it breaks this point, it means I have no reason sticking to this. It means my analysis is wrong and I'm gonna take my loss and look for another trade. So I must make sure that my stop loss goes below it a little bit. So this tool of mine will start from here and go to the entry point. My entry should be here. Why here? This is the level whereby liquidation was engineered. So this is sell to buy level. So that is where the decision was made to take this market up. So they sold the market to buy it. They triggered retail traders to think, look, we are continuing downwards. And then the smart money changed the market upwards. Okay, so I want to show you how I put my stop loss. There's something that I've set, it's called set. This set means stop loss, entry, and take profit. Okay, but here it is not going to show you how I take my profit. It should show you how I put my stop loss, and take profit also I'm going to show you how I do it. So I place set. It will give me automatically, this is the entry, this is the invalidation level, and my stop loss has to come down here. Why is my stop loss coming down here and not exactly at the invalidation level? It is because sometimes price might come and play around this area. And now because there's something we call spread, that spread will make my stop loss be triggered, because when the price is at this level here, due to spread will be pushing it at this level. So if price touches here in the real sense, this breathing space will enable my trade to remain intact. Even if price wanted to do anything it wants inside this level, I'm still intact. I'm still in this trade. Not unless it now decides to break this level and proceed downwards. So now what do? I pull my long entry tool, which is here. So I put my stop loss here. You see now those are the 11.6 pips. I place it here. Those are 11.6 pips. And remember, we marked the take profit levels. We marked the liquidity zones. And we said we always aim for the low hanging what? Fruits. So this way, I am not going to take my take profit here, or at this level, or at this level, or at any random level, but to that high time frame what? Level that I marked earlier on. This way, you will trade with clarity. Okay, I'll aim there, because I know once price has targeted this liquidity, the next it's going to target is the nearest liquidity before it is decides to retrace backwards. So why would I take my profit here, yet I know very well this price must go all the way, at least it must reach here before it decides otherwise. So this way, I will wait for this trade to play. This is 1 to 9.85. Okay, it will play out until I get to this level. So at this level, I'm happy to get out. I don't care how far the price will go thereafter. But I know, at least I know from the back of the mind, it must target this liquidity before it decides to do otherwise. And you can see, once it targeted this liquidity, it is now just hovering around here. It is now not making any move. You see, it might take 3 or 4 days for it to come here, and then it will sweep this liquidity and then start hovering around this level. It might again come down to this level before it targets the overall liquidity. So always aim to take your profit at the next higher time frame point of interest. This point of interest is this equal highs. There's a lot of liquidity lying here because a lot of people thought now the price has changed direction because it has broken those structures that were holding, not knowing it was just going down here to rebalance whatever it left behind. Okay, now having said that, I want us to calculate lot size using this example that I've shown you here. How do you calculate lot size? So up to this level, we've spoken about entry, stop loss, and take profit. Okay, so how do you calculate lot size, assuming now you want to enter this trade? So the lot size, first of all, you have to know from your entry to your stop loss, how many pips are those? Now I want to explain pips in detail. These 11.6, these are the number of pips that we are willing to lose. This is our stop loss number of pips. And our take profit pips are up here. So we are risking how many pips? 11.6 pips to make 114.3 pips, which is equivalent to 9.85%. So if we risk 1%, we are going to make 9.85%. So if you are having a pro-farm challenge, which asks you to get the first phase 8%, and here you've got one trade which runs to 9.85, you just risked only 1%, and by this trade waiting for it to mature and take profit, just one trade, it means you passed your pro-farm challenge. You wait for phase 2, as simple as that. So for us to be able to calculate the lot size, there are some things that we need to put in mind. One, the currency pair or the asset you are trading. So if you look at the left hand side on the top here, we are dealing with AUD USD. This is Australian dollar and US dollar. So that is number one. Get to know the asset you want to trade. Number two, get to know the number of pips that are there as your stop loss. Our number of pips are 11.6. Okay, that is all you need. And then the entry price, you need to check this with your broker, because trading views sometimes differ with your broker, but at least you have the rough information. The price is at the prime area, the point of interest. Then you need to know your stop loss should be 11.6 pips. So now you will go to your preferred broker and enter your trade. Okay, now we will go to my FX book lot size calculator and see what is happening there. So how do you get to my FX book? You just type it, my FX book. You pick this one, my FX book calculator or position calculator. This one is straight to the point. My FX position size calculator. Pick this one. It will bring you to this. Okay, you select it. It has opened. Now, what next from here? Remember, this is how the platform will look like. So remember, it must show you this position size calculator. After it has shown you this, it will ask you the currency pair, which is AUD USD in our case. The account currency, you know your account currency, mostly it should be in US dollar or any other denomination. And then the account size. So for example, if your account size is 10,000 US dollar, you put it like that. Risk ratio, how much percent are you risking of this account? Normally we risk 1% in the most cases. So you go to stop loss pips. Ours were 11.6. Now after you do that, now you press this calculate. This area, you leave it open because it has not asked you to fill anything. It was already filled. So once you press calculate, it will tell you money you're risking is just $100, because $100 is equivalent to 1% of the 10,000 overall account that you have. So this is the money you're putting to risk, because you just wanted to risk only 1%. So the units, leave alone these ones, they're not very important, but the sizing, so you will be putting a lot size of 0.86. Up to this level, we've seen how the lot size is calculated. The part that is remaining is that part of entering the trade itself using this lot size. Now we shall be moving to MetaTrader 5. This is how it looks like. So you see, these are the number of assets that are traded. This is a demo account. I have just opened it for the purpose of illustration. You can see balance is 10,000 US dollar. I have not done any trade because it's just a demo account. So this is the same asset we were looking at on the trading view. So Up here you can see it is AUDUSD M15. M15 stands for 15 minutes time frame because this is our entry time frame. So we did our analysis on the 4-hour. We moved down to 15 minutes for entry. So assuming now the price is down here and you wanted to do what? To enter. So what you would have done, you have the lot size already. The lot size what? 0.86. That was the lot size that we calculated. So now what we do, we want to place our limit order at this level, because this is where we've seen change of character and all that. Those change of character imbalance is done on the trading view. When you come to MetaTrader 5, is purely execution. So you are here. How do you execute your 1% entry, and how do you know where to put your stop loss and where to put your take profit? So same measurements that I use on TradingView, I use them here. So I will hold my tool that tells me from this level, my stop loss has to go down here. My entry has to be here. You right click and then you go to trading and then you go to new order. At the new order, you will see the symbol. It is AUDUSD, which is the right thing that we are trading. Under type, do not go to instant execution, not unless the price has already reached this level. But normally I like doing limit order. Once you see that, change of character, you place your limit order down here before the price comes back to rebalance this level. So we would have done what is called a limit order, which is pending order. In this case, we are buying. So it will tell you buy limit. Okay. So volume, purposely, this is now the lot size that we calculated from my FX book, which was 0.86. Now this is where you put your lot size. 0.86. So there's price, there's stop loss, there is all this. So this price, it means the entry price. So your entry price, to get the precise entry price, I normally use this tool. Once you do this, this is a level that runs horizontally. It will give you a price at this corner, which is 0.63805. 0.63805. That is the price we want to get filled. Our stop loss will go down here. So our stop loss will be at 0.63690. 0.63690. That is where we are telling our broker, look, if the price goes beyond this level, we have no business staying into this trade. Take us out. That is fine. We were wrong in our analysis. We shall look for the next entry. So after you've done that, the simple pending order, it was a buy limit because we are buying the market up. Okay, there is take profit. Okay, now take profit, remember we said we want to take profit at a level up here where there are some equal highs. So you use this tool again. To be precise, it will give you a price at this corner, which is 0.64952. You've seen the way we filled it. From the asset, ensure that the asset is the correct one. The order is the right one. It is the buy limit and not a sell limit. Volume is the right one. Now volume, this is the lot size. Price, which price do you want your order to be filled at? This is the price we want our order to be filled at, which is down here. Stop loss, where do you want to be taken out in case you are wrong? Down there, which is 1% of our entire account. And then expiration, when you see GTC, it means good till cancellation. So my trade will be good until I cancel it. So if I do not cancel it, even if it takes 3 days to play, that is fine. I'm gonna wait. And then what do? You press here, place. Okay, you can see what has changed. There is a level here which is green. There's a level here which is red. There's a level up there which is red. So these red up and red down, they mean these are your exit points. If you are wrong, you are telling the market, I want to exit at this level and I'm okay losing 1%. But if I'm right, I want to exit at this level and pocket my profit. It is as simple as that. So from here to up there, it will give you 9.85. Basically, this is now what we've just done from here. So we did the analysis. We saw the price has come to 4-hour time frame. We've seen change of character. We do our entry on now the MetaTrader 5. How did we arrive at this? You remember we marked the area of liquidity on the 4-hour as the leg was returning to the origin. That way we have clarity in our minds that we can hold this price. Even if this price want to show some signs of retracement back, we know the reason why we're holding on to it, because the level of liquidity that we wanted to target has not been hit. So the price will not go anywhere before it targets this liquidity. Okay, we've covered a pip, we've covered lot size, spread I've told you is the difference between bid price and entry. Let's go to MetaTrader 5. Is where we can see this spread very clearly. Stop loss you've seen, take profit you've seen. So let us do something to do with the spread. On MetaTrader 5, what can be seen, there are two prices. There's one price at this level and there's another price at this level. As you can see, the way the movement is happening, this candle is printing. This is the ask price and this is the bid price. So if I enter at this level, the broker will fill me here. Why? The difference between the ask and bid is what we call spread. So you can see at the moment, the way they are moving, there are two. So this is the spread difference between the bid and ask. So if I enter my trade right now, for example, if I press buy and the price is at this level, the broker is going to fill me up here. So for example, if I press buy, my buy position will be placed up here, not down here, because there is this difference. So basically, that is what we call spread in trading. And that wraps up part 1 of our Forex beginner's guide to trading. If you've learned something today, get ready, because part 2 and 3 are coming up next, and I'll be breaking it down even further with live examples so you can see exactly how it works in real market conditions. I am dropping gems that most people charge for in their private mentorship, but I'm not going to charge you a penny. I'm dropping these things for free. So show some love, like this video, subscribe to the channel, comment below, and share it with someone who needs it. Let's grow together. Bye-bye. See you in the next.